We must study in terms of the compensation plan, whether it incentivizes the company, at the same time incentivize the CEO. It should be a balance. Imagine the CEO only has a base pay. Do you think he will be motivated? But if it comes with a share reward, but the share reward has a very high expectation and is almost impossible to hit, it might not motivate him, and therefore declaring dividend is the easier way to milk money out. For Starhub in this case is a telco company. There's a lot of regulation around our telco business because you need a license to function, and in the past there's only a few players. And in Singapore, if they are only local business, that means the telco do not have overseas expansion plans. So how much can you grow? You only have a few choices. Number one, you have frequent purchase. Number two, you increase price. But because it's regulated and it's competitive, your choice of expanding the business is quite challenging. So as investors, right, the first thing we need to do is to understand the business model first. Then you'll be able to see the past history. How did the company navigate to reach to where they are today? That's why we read at least more than 2 years of financial report. And when it comes to that landscape itself, you can also see how big is their profit margin, how big is their gross margin. And that gives you a sense whether is Starhub a company that is capital intensive or not. Because our telco requires infrastructure, requires maintenance. So if your revenue starts to slow down, but because you have built up such a big infrastructure to grow in the first place, you need more money to maintain the assets. And that itself will give you some liquidity issue. So in order to keep the business, you will have to cut your dividends eventually. That is how it could turn out.